try not to lean on the token early on. Try and hide it away. don't use it. Don't try and do liquidity mining or anything like that super early. You want to make sure that you have a product that people want without a token, and somebody should want it without a token. And then once you feel like you found that, you can use the token as like turbo juice and really like light the thing on fire. But really be hesitant about it. Don't let it be a crutch. You can get people to do almost anything with the token. If you just like put enough of it out there. But your job isn't to get people to do stuff. Your job as a founder is to find a replicatable business model, right?
Hey everybody, Tanner here with WAGMI Ventures. On today's episode, we have Blake West, co-founder and CTO of Warbler Labs supporting Goldfinch. For anyone who's new, this is the WAGMI Ventures podcast where we do company snapshots with interesting founders from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast, but for now, let's get into it with Blake from Goldfinch. All right, hey everybody, I'm here with Blake West, co-founder and CTO at Warbler Labs supporting Goldfinch. Blake, how are you doing today?
I'm doing great, Tanner. Happy to be here.
Yeah, I'm really excited to have you on and chat. I know we have a ton to talk about, so let's just jump in.
Awesome.
I'd love to hear just at first kind of a little bit more about you and kind of how you got to what you're working on with Warbler Labs and Goldfinch.
Yeah, sure. So, the quick background for myself is I started out actually, no tech background or anything, but after college, I wanted to do music full time. I've been playing music my whole life. So I did music for 4 years after college, full time in Austin, Texas, playing in bands, doing production, original bands, cover bands, all sorts of stuff. Did a lot of teaching and stuff there as well. Along the way, I've always kind of been interested in technology though, and started teaching myself how to code. And then 2013, moved to San Francisco to go to Hack Reactor, which was one of the first sort of coding boot camps, if you will.
Okay.
And was in one of their very first classes, and that really helped kind of launch my career, if you will, as an engineer. And so started working at a healthcare company in the Valley called Hint Health. After that, I was the first employee, and then was there for a little over 4 years. Started getting interested in crypto kind of towards the end of that time. So it's probably like 2017. Started hearing about crypto more and started reading the Bitcoin white paper and just feeling like, oh, there's like something really interesting going on here. And so when I was looking for my next role, thought about doing something in crypto. Ended up joining Coinbase in 2018. Was there for a couple of years. Started to feel and see these like green shoot emergence of DeFi, and was just really fascinated by what was going on there. And so at that time, this is around 2020, kind of late 2019, early 2020, started thinking more seriously about trying to start a company in DeFi. And so with my co-founder, Mike, who I've known for forever, we actually were freshman year roommates in college, like randomly paired together. But Mike had also moved out to the Valley and ended up working at Coinbase too. At the same time, he was part of the reason. He was like, oh, dude, you should really think about working at Coinbase for your next job. And so me and him were interested in starting a company, and especially in the DeFi space. So we actually went to this A16Z crypto startup school thing. They did that. So I think they just announced it like a redo, or not like a redo, but they're like relaunching it. And
I saw that.
Yeah, this is just like the last couple of weeks actually. So they had done a version of it 3 years ago, in 2020. Okay. And we were there along with a lot of other great founders, founders of like Phantom Wallet and Notional, and some other great companies sort of came out of that. And we at that time, it was just a part-time thing. There was no investment. It was just like, they were just kind of getting people together and being like, who's interested in doing anything in crypto? Let's just like meet once a week to talk about stuff. And so anyway, we did that, and sort of through that ended up sort of like arriving at what eventually became Goldfinch. And a lot of that stemmed out of this, like we were seeing these traction in DeFi of like, oh, lending really works. It's cool. It seems like it could be a huge space. We were really interested in finding, how can we do this with like real world companies? Because at the time it was all just like Compound and Aave. That was like literally the only type of
Sure.
lending you could do, which arguably isn't even really lending. It's kind of just like margin trading, so we were just really intrigued by this idea of how can we bring this to the real world, and I'm happy to talk about sort of why we ended up in emerging markets and all that kind of stuff. But that's the maybe not so quick background. But yeah.
Yeah, no, that's great. That's super interesting. I do want to circle back to kind of the emerging market focus, but just for anyone who's not familiar, what is Goldfinch? Kind of high level. What are you building?
Yes, awesome. So great place. Maybe should have talked about that before. But so Goldfinch is a credit protocol built on Ethereum, and we separate ourselves from a lot of other lending protocols that are on Ethereum by the fact that we do lending to real world businesses. So currently we have about $100 million of loans outstanding to borrowers in over 20 different countries. Primarily, these countries are what you would call emerging markets. So about 80% of the capital is in these emerging markets. We do have 20% of the capital in the US. But this is places like Nigeria, Kenya, Colombia, and India, Indonesia, like sort of all over the place. A lot of them, broadly global south. And so these borrowers there have a real pain point. They have a real access premium that they pay. It's tough for them to get access to capital for structural reasons. Some of those include that the governments in these areas often have high yield government bonds, tend to crowd out investment from the private sector. And then also there's just not a lot of money to begin with there. And their capital markets aren't as developed, right? And then there's also sort of still a kind of a stigma
Sure.
around investing in some of these markets from the Western institutions. Not that they don't, they certainly do, but it tends to be at like really large dollar and check sizes. And so Goldfinch has kind of found a bit of a niche with borrowers, and it's kind of like I'd say like $5 to $20 million range, where it's like a little too big for the local capital markets, but not big enough to start getting the attention of the Western institutions. And so anyway, that's sort of the borrower side. Investor side, it's all crypto, right? Like this is all smart contract driven. It's completely non-custodial. The loans and the payments are all on chain, fully transparent, and so that has attracted a lot of crypto lenders, people who have capital in the crypto space, and they're looking to do something with it. So it's all USDC based as well. It's all stable coins. And so this is offering a fairly unique opportunity on chain where it's not just hey, I'm looking for 100x token stuff. It's like, hey, I want something to grow at more like a 10 to 15% a year type of
Yep.
investment. So that's what's going on with Goldfinch.
Yeah, super interesting. So I'd love to dive in a little bit on really just like some of the philosophy behind Goldfinch, where like even just taking a look at your website, there's some talk of one perspective, like the line for too long the financial system has been fragmented and owned by everyone except the users. Crypto offers a reset, and that everyone can participate in this transformative financial renaissance. And
Mm-hmm.
so I guess I'm curious about that, like maybe some more of the why behind Goldfinch. You touched on this some, but I think you could probably really unpack this.
Yeah. So, I mean, I think what that phrase there is getting at is it speaks to some of the vision, which I think we also put on the website there, but it's like this idea that today we really do have quite a fragmented financial system, right? Every country has their own rules and ways of doing things and different payment rails. And this is why Stripe is $100 billion company, right? It's just like so
Sure.
inefficient to move stuff around that you need a giant
Yeah.
company like them just to try and smooth over the cracks. And what I think is really interesting about crypto is it offers this way to do a more singular global market for this financial system. And it can be sort of like a base layer that, I don't expect that, it's going to like fully replace the financial system or anything. I think that stuff is too entrenched. But in the same way that, Twitter didn't replace newspapers, right? They still exist, but yet we used to have this very fragmented kind of newspaper and communication landscape prior to the advent of the internet. And then now you have something like Twitter, which is this global conversation marketplace, right? And
Yep.
it's this single thing that I think it's sort of I see that analogy there, right? It's like newspapers, very fragmented, hard to build, hard to start, but everyone in the world had them, right? Just kind of a different version of them, and they were all a little more local. And then the internet comes along, and you have things like Twitter, which create this like global central conversation marketplace. One didn't subsume the other. It's not like there's only Twitter now, but they start living in parallel because they serve kind of different purposes, right? And I think you're going to see something similar with credit funds and equity funds, and how it's a very fragmented thing now. But I think crypto will allow for a global singular marketplace to exist, which I believe should eventually, reduce the cost of capital, increase transparency, increase access and liquidity for all these assets that can live on a central place, even if they eventually need to like fan out into their respective markets.
Yeah, that makes a ton of sense. That's super interesting. I'd love to go back to last year where, it looks like the white paper for Goldfinch comes out like circa July 2021. Is that right?
Yeah.
So, what have been some of these early challenges just over the past year even, and how have you and your team been working to solve for those?
Yeah. So, I mean, I think the challenges throughout have largely revolved around trying to just maintain the marketplace. And what I mean by that is like you've got these different sides of the marketplace with Goldfinch, right? You've got backers, LPs, and borrowers. And so just to get a little bit more into how Goldfinch works, so you have the borrowers, which you already kind of explained. There are these often fintech companies in emerging markets. They come and they present deals on the platform, and those deals are presented to the investors of the community, who can be grouped into two types. One we call backers, the other are called LPs. And the backers, they are these like kind of more active investors. They put capital directly into a deal. They do their own diligence. They look at the data room and things like that coming from the borrower. And LPs put capital into the senior pool, which is kind of like an aggregated and diversified pool across all the deals that exist on the Goldfinch protocol. And so what some of these challenges have been is that you have to kind of balance these different sides of that marketplace, right? So, in the very beginning, we were like, well, we need to find some borrowers. I guess let's find some borrowers. So we started talking to them, started getting the ideas of what a deal could look like, and then we would put deals in front of potential investors and be like, okay, well, do you want this? But it was all very kind of manual, right?
Yeah.
But then eventually you get investors like, oh great, yeah, I'll put money in. This seems cool. And you have almost like too much money, and then you got to go find deals, right? And
Yep.
that you kept kind of like bouncing back and forth between trying to balance these things out, making sure you find deals and making sure you find investors, and just trying to play those two things out became challenging. Of course, along the way, having to like actually build the smart contracts and the platform and stuff to make that possible. And so I think that was just really some of the challenges, because we had to, as the old kind of saying is for startups, you're sort of building the plane in midair, right? And we're like,
Sure.
You don't have things guaranteed. You don't necessarily have a deal guaranteed because the borrowers want to see the capital, and you don't necessarily have the capital guarantee because capital needs to see the deals. They also need to see track record and buy-in and stuff like that. So I think that sort of phrase really started to come home for me as we've been building this, just like seeing how difficult it is to keep those things in balance.
Yeah, that makes a ton of sense. Just from afar, I can imagine. I can imagine some might have a perspective that these marketplaces might just happen, right?
Mm-hmm.
And so I think it's really interesting that no, it actually takes. I mean, you're really creating this from scratch, and it takes a lot of work to kind of balance that marketplace out. So,
yeah, it definitely does. I mean, I think it's always like that, even with other marketplaces and kind of Web2 land. You always have to kind of start small and get the thing to work,
right.
And then once it seems like it works, you have some ground to stand on where you can then try and expand beyond it. But you usually have to start small, and it's a very kind of manual process.
For sure. So, kind of similar question. I'm curious what stood out as kind of most surprising in your work thus far in building Goldfinch, where launching something new, there's always kind of new chances for kind of unforeseen challenges, but also kind of these serendipitous opportunities. So I'm curious how the journey's looked through that lens of kind of rolling with the punches while driving a meaningful vision forward.
Yeah. So let's see. I mean, some of the stuff that's been surprising to me is, I guess one is just, it was surprising how quickly things moved in the beginning, to be honest, like how fast, capital was able to form, how quickly we were able to get deals going. I think when we started it, Mike and I assumed after year one, like, oh, well, maybe we'd have like, $10 million, $20 million worth of deals. And, maybe we'd have like 8 people at the company or something, but it ended up being, double, triple that. And I was just really surprised. And I think a lot of that comes down to it was just a crazy time in the crypto space, right? 2021 was just like a year that's probably not going to get repeated for a very long time. And so um, I think it's a good reminder of just how, um, not at the whim, that's a little too strong, but like, it is really is like a boat, and it's about finding a wave, right? I think a lot of startups are about like, you've got to pick the right wave, and then, uh, and then of course you have to be able to surf the wave too.
Yeah.
But like and so it takes both. You have to really execute well, but also if you don't like pick the right wave to begin with, it's just like it's never going to work.
Yeah.
Um, and so I was, it was just so surprising to really feel that, like, oh, like we picked a wave that really hit in 2021. Like we had started thinking about it early 2020. It wasn't really there at the time, but it felt like seeing it take off. It was just so surprising how much that affects like everything, right? Like how much everyone wants to talk to you, how much capital you can get in, how many deals are willing to close. Everyone's like, oh, crypto's cool. Let's talk. Let's have a chat about it. Like just when you're on that wave, it just really impacts like basically everything else, like the morale of the team, all of that. And so I think that was a surprising thing to really feel at kind of a visceral level. Um, I would also throw into that, was surprised at just how impactful like the token could be. It's just like it's insane. Um, the the things that we had people doing in the discords and stuff, like people made like cakes. They
Oh
would
my
like
gosh.
take pictures of it and like put it up on Twitter, and people were like making their own swag and their own merch. Um,
Wow.
People like
So people
made music
really
videos.
investing in
Like
this community. Yeah.
yeah,
Yeah.
people
Yeah.
made music videos and stuff. Like I got sent like very strange raps from all over the world. um, that was also very surprising to see just how impactful that could be.
Yeah, that's super interesting. So I want to backtrack to something you said about kind of the emerging markets focus, where you said,
Yes.
something like 80% is currently focused on emerging markets. And, I recently read this kind of research piece on real world assets by Tej Ragsdale. He's at MakerDAO and a couple other folks that
Yeah, I read that
actually,
as well, actually. Yeah.
yeah, they covered Goldfinch quite a bit. And,
Hmm.
they, in kind of their taxonomy, they characterize your work as essentially like emerging market credit, kind of falling in that category.
Yeah.
So, um, you've touched on this a bit, but I guess I'd be really interested in kind of like a couple part question here, where like, maybe one, just speed running a bit of the history behind emerging market credit, kind of where it's been and maybe where it's at now, and then also kind of what are the parameters in which Goldfinch is most useful or appropriate for maybe specifically for borrowers right now,
Hmm.
and maybe hopefully this isn't too big of a question, but then maybe transitioning to a bit of the future possibilities with the capabilities and community that Goldfinch is building. So we can do all or none of those. But
Yeah, yeah. Cool. So I guess let's just start about the emerging markets piece. So yes, we were in that report, which by the way, that was a great report. If people are interested in
oh
real
my
world
gosh,
assets,
yeah,
I think Teach did a really great job. It's very detailed, super thorough. He's
yeah,
got a huge taxonomy of all the players that are in the space right now. I think he's got a lot of interesting thoughts there on how it could evolve. But anyway, to the specific question. So yeah, in terms of emerging market stuff and like the types of borrowers who might be best suited to it right now, I touched on this a little bit earlier, but a lot of emerging markets have these kind of structural issues that prevent a lot of private capital formation. Um, the main drivers of that are, one, there just literally isn't as much capital to form in the first place. Almost kind of by definition, emerging markets have less capital than a lot of the quote unquote developed markets, and so that harms capital formation. And then also, a lot of the governments have these high yield government bonds, and that what that means is, it's like the government of Nigeria is being like, well, put money in us and we'll give you like 10% yield, right? And that has this effect of crowding out or kind of sucking up a lot of the private investment that does exist from banks and from the local private investors. And to be clear, you see that same effect in America now, right? Like with the Fed raising rates, the yield is so high in the government bond, everyone obviously trusts the government more than anyone else, right? The government can just print money, so they're probably going to pay you back. And
yeah,
so that means if that delta between like the rate that a private fintech is offering is not that much different than what the government is offering, well, the money's going to go into government, especially when you don't need really due diligence on it. You don't need to think about it. Just throw money. You can basically throw any amount of money. and it's highly liquid and all that. So these high yield government bonds, basically what we're seeing right now in America, that pretty much has always been happening in emerging markets. And that's because a lot of them have these infrastructure projects that have huge rates of return. And so like they can offer these high rates because there is just so much to do, and it's like pretty obvious what they need to do. And so
Yeah.
anyway, so those high yield government bonds suck up a lot of investment. There's not as much money there to begin with. What this ends up meaning is that the emerging market borrowers just don't have as much access to potential capital. And so they would have to look outside. They have to look for foreign capital. But, there is still both stigma for these emerging markets. And also there's like, just the connections and like a human aspect to it. Of like, you just don't know people in foreign countries.
Sure.
So it's tougher to get access to that stuff. And so this is, I think, where Goldfinch has come in. There is kind of a sweet spot, right? As I was mentioning this before of like, if you want to raise like less than like $1 million or a couple $1 million, that's like just not that much money. And so you can probably do that in local capital markets. Or if you want to raise like a lot of money, like 20, 25 million plus, that starts to be a check size that, bigger credit funds around the world, even in those in the West, would be, interested in writing checks for. And there have people who look around at these different markets. It's not like emerging markets are, not served at all. It's just kind of they're underserved, especially within this particular niche. I would say between this like roughly $2 and $20 million range. And so those are the borrowers who have been Goldfinch has been typically working with, and they often are these fintech companies. So they use technology in some way to have an edge in lending. They are lenders themselves, and so you can think of Goldfinch as a wholesale lender to them, and then they turn around, they have the local licenses and their local underwriting and whatever it is, their kind of special sauces for how they underwrite. Just to make this a little more real, we can give some examples too. So like one of them is a company called Tugende in Kenya, and Tugende does like rent-to-own motorcycle financing for people who want to do gig economy deliveries. So, you can rent one of these motorcycles. They have like GPS and trackers on it. And like, if you don't pay back, well, they're just going to come get the motorcycle back. And they've got an asset that backs that loan in the first place. So it's a solid business, and using technology, again, this like GPS tracker, and they have, apps and stuff to maintain that. But the borrower is using this for a productive use case, right? They make money from that because they're taking this motorcycle and they're doing deliveries with it. And so, that's one example. Another example, one of our very first borrowers was PayJoy, who has special software on smartphones that they distribute. And so you can get a smartphone with no money down, pay it back over a couple of years. But if you don't pay it back, well, guess what? They're going to shut your phone off, and they can do that remotely. And so that's their kind of edge there. And hey, it turns out people really want their phone to work, and so they pay back the loan. So they have extremely good repayment rates, right? So I'm just bringing these up to help, I think, make it a little bit more real. And so that sweet spot is where there's this, what we call an access premium. It's not so much a risk premium as it is access. Like these people have quality businesses. They have track records that you can look at and see that they are performing. And then, on the other side here, on the investor side, you've got crypto capital, which is risk tolerant, doesn't have as many opportunities in terms of where it was putting its capital. It's just like tokens and ETH, but there's like not a lot of other stuff going on. And so that's where the two sides kind of meet. And also, because it's global, I think there's a little bit less stigma on where they invest their capital in terms of markets.
Yep, super interesting. So you and we actually had a really interesting kind of email correspondence where I was asking, this was a little while back, but I was asking about, Goldfinch's relevance for, markets considered high risk. So like, I think the example was a place like Lebanon where, there's like a banking crisis, currency crisis, kind of political crisis. And I actually really appreciated you had a really thoughtful reply about kind of the long game of how, Web3 could eventually make high risk lending environments more palatable to credit investors, whether crypto native or otherwise potentially. And I just found this vision you sketch really compelling. So could you talk a little bit about that bigger picture vision, and if it kind of connects with anything longer term you guys are thinking about at Goldfinch, or anything you want to say kind of in all of that?
Yeah, sure. So right, to kind of like repeat the context of that email, as you said, you were talking about these high risk environments of lending. And it's very true that today, definitely part of what prevents more capital from flowing into these emerging markets is this designation of being high risk, right? And what that really means is that they don't think the governments work very well, right? They think the governments could confiscate capital, or that the court systems are not reliable, or they're abysmally slow, et cetera, et cetera. And so that just means that if you're a debt investor, you really are going to be pretty hesitant about investing in such a place, because if you need to enforce on your loan, well, you're going to have to go through their court system. And if you just don't trust that and don't trust the government there, then why would you do that, right? Like, debt investing is all about protecting your downside. It's not about getting upside the way equity investing is. So in a lot of ways, it's sort of the opposite of venture investing. And so what I think crypto offers here in this kind of longer term possibility, because yeah, what I was getting is like early on, I think people thought, oh well, like great, crypto can go anywhere in the world, so like now we can send money to all these other places. But it wasn't like the underwriting, it wasn't the ability to send money that really prevents a lot of that. It's this other piece that we were just talking about. It's this feeling of security that, like, if you need to sort of enforce on your loan, you have the ability to do that. And a lot of that comes down to the governments having control over the financial system, and then you don't trust the government. And so what I was bringing up is sort of this future vision is, if you get to a world where a lot of financial flows can take place on chain, then I think a lot of these really interesting possibilities open up, because there's more transparency on those dollars, but most importantly, you could in part into smart contracts or through arbitration too. I think also some people get a little too lost in the, like, well, smart contract can't do absolutely everything automatically, so none of it matters. But I don't think that's really the key part. Like, it can just be that it's a contract that's not controlled by the government, right? It's a contract that could be arbitrated between even U.S. arbitration people, right? Of like, money can be sitting in there, and then like if certain conditions are met, or you haven't seen these flows or whatever, like then that effective bank account or smart contract could be paused or halted, right, until arbitration can come in and deal with that, right? And you can also programmatically deal with the whole debt stack there in a way that's much more clear. Like right now, people deal with all these things just finding out, well, who else is on the cap table, who else do you own money to and loan money to, and a lot of that stems from the fact that this stuff is opaque. You don't really know what bank accounts are getting opened up with. But like, if you kind of knew and it was all on the blockchain, and those flows and stuff could be controlled through some automated means, but also through some arbitration, then I think all of a sudden that could open up a lot of these areas to investment, because people could trust it. Now, I think we're a long way from there, because people don't really trust the blockchain right now. So, maybe trading the Lebanese government for the blockchain doesn't really seem like a great trade to a lot of debt investors. But I think hopefully that'll change over time. And I think that's the really, really interesting part for me about what crypto can do in a lot of these places.
Yeah, that's super interesting. So, this community that's forming around Goldfinch, I mean, what are people most excited about and engaged with, kind of in Discord or conversations you're having, meetups, whatever? Like, what are people jumping onto most, I guess?
Yeah, I mean, what we hear over and over again is the fact that we're having a real world impact,
Yeah.
and that it's, especially, I think, emerging market piece, there's a lot of people who really like that. And I think it's because, crypto is sort of starving for some real world impact. A lot of it feels, unfortunately, like a bit of a merry-go-round or a self-referential circle. And it is just, it's kind of cool for what it is. And it's interesting that it's been able to get as big as it is from just that. But people really want to see it start to impact more than that. They want to see it sort of break out of the matrix, if you will. And I think we've been trying to do that from the beginning. I think that is where our community is most excited.
Yeah. So, kind of moving towards the end here, I guess I'm really curious, in the Goldfinch update number 33, this is the newsletter, there was kind of a teaser of a big announcement this week, and I guess I missed it so far. So are you able to talk about yet kind of what's been revealed this week?
Yes. So on Wednesday, there was an announcement that basically the wait list for the membership vaults project is up. And so now, this is crypto, so it's not really like super secret. There was a vote on this many months ago about creating and building the membership vaults thing. The whole community voted on it. And so Warbler Labs has been helping to support that and help build that out. And so the waitlist was put up on Wednesday, and it should be released pretty soon. And don't like exact date on that, but it should be released pretty soon for the actual feature. And what the membership vaults project is about, as it was put up in the post months ago, it's about improving the tokenomics of Goldfinch, and kind of this like phase one. And we really do this as kind of want to have like a very participant centric model, right? Where what this is about for the participants in Goldfinch, people who are investors, their LPs or their backers. We want to encourage them to also be owners of the protocol. And so if they have their investment token of like as being an LP, they can put that into a vault as well as GFI, which is the native governance token of the protocol. They can put both of those into a vault and earn enhanced yield, as well as also be a member, right? And so eventually there'll probably be enhanced voting power as well, and be eligible potentially like new channels of communication, getting these features first, that sort of thing. So we're viewing this as like a really awesome step in evolution in the tokenomics of Goldfinch, and that was the announcement.
Love it. Okay.
Yeah.
So, any kind of last advice here for any founders building in Web3? Any generalizable lessons just from your experience that you feel like would be broadly useful for, whether they've been founders for a bit or they're kind of just entering the space?
Yeah. So I think my most generalizable advice for Web3 founders would be to really try not to lean on the token early on. Try and hide it away. don't use it. Don't try and do liquidity mining or anything like that super early. You want to make sure that you have a product that people want without a token, and somebody should want it without a token. And then once you feel like you found that, you can use the token as like turbo juice and really like light the thing on fire. But
Mm-hmm.
really be hesitant about it. Don't let it be a crutch. You can get people to do almost anything with the token. If you just like put enough of it out there. But your job isn't to get people to do stuff. Your job as a founder is to find a replicatable business model, right? Scalable
Yep.
business model. And so like just be careful, because I think Web3 especially, the tokens have just gotten to be a little bit too much of a crutch, right? And it's you like think you have product market fit because people are, oh well, yeah, I'll do that if you're giving me this token, and then you just kind of think, oh, as long as I get some people to do it, other people will do it. But it can be confusing as to what they're actually doing it for. And so that's my main advice is find product market fit, and then use the token to build from there.
Yeah, that's great advice. So, Blake, what are you guys working on right now coming up? Kind of next steps for Goldfinch, and then what's the best way for people to follow along the journey? Maybe get involved in the community themselves.
Sure thing. So, I mean, just some of the stuff that is being worked on. As mentioned, the membership vaults launches is coming up. Also, some updated withdrawal mechanics are coming up. It's going to be a new way to just let people have a more orderly way to withdraw capital if they need to. And in terms of getting in touch with us, the best way just to follow along by going to goldfinch.finance is the main website. And also we're on Twitter at goldfinch_fi.
Perfect. Blake, thank you so much for the time. I loved getting to chat. I'm a huge fan of Goldfinch, and I'm super excited to see all the great work that's around the corner. So have a great upcoming weekend here, and thank you for the time.
Thanks so much, Tanner. You have a great weekend as well. It was a pleasure.
All right, take care.